Hello everyone, my name is Andrea and Aloysius, and this is my debt payoff journey. It's my second video in this installation. I did make a couple of videos a long time ago, so if you want to watch those, by all means. But these are fresh and more new. And in my last video, I talked about, or actually I showed you a list of all the debts that we have. And this time around, I'm going to tell you the payment amounts, the monthly payment amounts, and what I did to increase the amounts and what kind of a strategy we decided to take on. As you can see, all these in red that have been crossed off, we have paid off. And I have payoff dates, and the earliest one was 2019. So May 24th, 2019. Just so you know, we were able to pay some of them off because we also had saved up $20,000. My husband has his own bank account. I have my own bank account, but we also have a bank account where we combine all of our funds together. So that's like a savings place, right? So that was where we had about $20,000 saved up. Again, I had no intentions of helping with the student loans initially. I had this one here from my aunt for $15,300, and that really was my only debt. And then I had eventually we had taken up 2 car loans, so we had those, and I was contributing to both of these as well. But my real debt was this $15,300, and I was contributing $630 a month. So every paycheck that I got, I was saving or setting aside $315 every fortnight. And I was able to pay my aunt off the full sum of $15,300 as of March 27, 2020. Now, that was one of the last few loans that we paid off, or I had paid off. But let's go back to this one here, which was the first thing that we paid off, really. May 24th, 2019. So remember I said we had about $20,000 saved up, and we were big savers. We were very frugal. We don't spend too much money, and our big thing is traveling. So that $20,000 we had saved up was really for emergency and traveling. And we decided, you know what, we would be able to pay this one off because it was only $4,700, and that was what we did. But prior to paying it off, I was actually going to round it up to $206 a month. Of course, that didn't really happen because the debt payoff journey started in May of 2019, and we decided, you know what, we can just pay this off, so let's pay it off, and that was what we did. So after paying off this car loan, we added the $206 to the Discover student loans. So I know he was paying a combined total of, is it going to show me? It's not going to show me. Oh, it is. Okay. So a combined total of $1,291.75. So out of that, we added this $206 to it, and realized that, okay, we still have some money left in the savings account. So let's knock out the 2 with the biggest interest rate. So 9.25, 8.75. Yes, this one has a bigger balance than the 8.50%, but it also has a higher interest. So that was why we decided, okay, we can still dedicate about $8,700 to paying off these 2. So $20,000 plus that, and $20,000 minus $8,700 and minus $4,700. That would still put us in about $8,000 range in our savings account. And we decided that, okay, we were just going to leave it at that, right? We don't want to deplete our savings account any further, just in case we had some kind of an emergency, like a flat tire, a car breaking down, something like that. We just wanted to make sure we had enough. Or a furnace breaking, because clearly we had to change that at some point. And so these two that we had paid off, so instead of just adding 206 to all of this, after we paid these two off, we continued adding these two payments, that $45.86 and $60.40. So an additional $106.26 to these two to slowly pay those off as well. And that was how we combined both the debt snowball method and the debt avalanche method. Like I said, we didn't really follow a strategy. We wanted to knock out as much as we could, and we just started going at it. But after we paid all of these off, the thing is, the government student loans kind of came to a halt. So we weren't paying anything to the Great Lakes ones or the Perkins ones. But of course, we had to pay the mortgage. So what we did, instead of paying the Great Lakes loans and the Perkins loans, since we had paid off everything else, we thought, okay, it would still be a good idea to set aside that money, in case the time comes that the student loans, we would have to start repaying them, right? Whenever the government says, okay, you now have to start making your payments again. And it's a good thing that there's no interest being accumulated. Excuse me. Because if there were, then we would be paying those. What we have been doing is, like I said, instead of making those payments to the loans, we were pretending to be making payments, but we were putting that money into our joint savings account, the one that initially had $20,000. So we just kept throwing money into that savings account every paycheck, just for the sake of these remaining student loans. And that way, once the government opens it up and says you got to pay it back, we have that money. Let me tell you, the balance between all of that is, I need to move my camera. It looks like it's $51,240.12. I'm not sure if that is the exact amount anymore right now as of 2023 March, because I feel like at one point in time when I asked my husband to see how much the Perkins loans and the Great Lakes loans, the balances he had on them, what were the balances left on them, the combined total seemed to be a little bit under $54,000. So maybe the interest at some point had accumulated. I don't know. But I'm going to stick with the numbers that I just showed you, and that is about $51,241. I like to round things up, even if you're supposed to round things down. I tend to round it up. It's just my mentality, depending on the situation. So in this instance, it's $51,241. So that's what we have left for the government student loans. And the good thing is we have saved up that amount in our joint savings account. So when the time comes for us to pay it off, we can, because we have been constantly dedicating this amount every month, every paycheck, to the savings account instead of actually paying on the loan itself. And also they're talking about student loan forgiveness. I don't know how that's going to work. And if it happens, great. We all get a little bit taken out of our whatever amount it is that we have, right? And that's amazing. So I am looking forward to that. But if it doesn't happen, then at least we still have the money to pay it off. But if that does happen, then the remaining is going to go to my mortgage. And I'm very excited to pay off my house because that's really the last thing that we have left. Why did we set aside the money instead of doing other things with it? I guess because we are one of those couples that wants to make sure we, excuse me, tickle in my throat. We are debt-free. And the fact that if we didn't set it aside, we weren't going to spend it on anything really, except maybe trips. But in 2020, we couldn't really take trips anyway. So the whole dedicating our funds to paying off all of this so that we can really have an actual savings account with a ton of money in there. Like now we have $50,000 that's going to disappear once we have to pay the loans. But can you imagine just having the $50,000 in your account to be able to do whatever it is that you want? Now that would be amazing. So yeah, so it's nice to see my bank account grow. And eventually, when all of this gets paid off, I know that we can slowly save again and put money back in there. As of March 2020, so slightly less than a year since we started our journey, we have paid off close to $33,000. And as of April 2020, we paid off $44,465.19. That includes all 4 of the Discover student loans, a total of $24,429.26. Both of the car loans and the loan from my aunt. So these 1, 2, 3, 4, 5, 6, 7, these 7 things have been paid off. Mind you, we still have $50,000 of that. And the house. The house I will go into detail in the next video. And I will also tell you how this monthly payment became this. But all of that in the next segment. So if you think you cannot do it, then hopefully my videos, my journey has proven you otherwise, because my husband was hell-bent against paying it off. He was just paying the bare minimum until I talked to him and I said, hey, look, you know, once I pay off this loan to my aunt, you're going to have a shit ton of debt and I'm not, and my savings account is going to continue growing and yours might or might not, but you will still have all of this debt. So maybe it's time you did something and I'm willing to help you so that we can be on the same page, you know, as we get older. And yes, it was for very selfish reasons, but it got him thinking and it also got me thinking, because I don't want us to be living in debt for the rest of our lives. And if we pay it off, when we pay it off, it's going to help us have financial freedom. And it's so amazing because I was so eager to pay off all the debts that when I first paid off the very, 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 very first one, I was jumping for joy. I cannot even tell you how happy I was. That feeling that I felt when I paid off my very first loan, my very first debt. And of course, when we took out that almost $45,000 within a year of starting our journey, this was from our savings account. This was from making weekly payments. And we'll talk about payments next time as well. But yes, making those weekly payments helped knock down our debts too from our paycheck every month. So yeah, if you liked what you saw, please leave a comment. Tell me how I can improve, and also subscribe to my channel because I have so much to share with you. My throat is very ticklish today because I have so much to share with you, and I really, really hope that you get inspired by my journey, and I really hope that you're able to pay off your debts too. I love you all. Thank you for being here, and I will see you next time.